Welcome everyone. Welcome to another market wrap. I have with me Mr. Pankaj Pandey and lots to unwrap in this market wrap from RBI coming out with its monetary policies outcomes and also a pretty good week for Nifty. We have finally been it's been a while that we saw back to back so many green days. So sir, क्या चल रहा है? First of all, let's start with market outlook and market expectations.
Hi, good evening, Vishu. I think yes, it's been a pretty good week for the markets. I think all the indices performed. Nifty was up about 2 odd percent, whereas the mid cap and small caps did even better with a gain of 4 odd percent. And this is happening after 5 weeks of consolidation in the range of 24,500 to 23,300. So since it's a consolidation breakout, our sense is that the market has further room to sort of go up. We would be expecting 25,200 kind of a levels in the next coming weeks. And since it's a very broad-based performance, we have seen that Nifty mid cap is up or has recovered about 9%. Small cap has recovered about 12%. It's only 1% lower than the previous highs. And also the good part is that the market breadth has been pretty good. So as of now, out of this Nifty 500 kind of a universe, 56% of the stocks are above 50-day simple moving average. I mean, this was about 35% a week back. And even the global markets have been also sort of doing very well, making new highs. So I think we are also heading into that direction in terms of making new highs. And after a good period of time, banking has started to do well, largely because of the fact also that we are seeing some kind of an incremental buying or incremental FI inflows coming in. So from that perspective, I think it's been a very good week, and I think further highs is what we would expect.
Right. And of course, the biggest thing in everybody's mind right now is what our governor said about the Monetary Policy Committee meeting. What do we take away from this, sir?
One is, I think RBI policy was clearly on expected lines. So a CRR cut was expected, and accordingly, RBI sort of obliged by cutting from 4.5% to 5%. And with this, overall liquidity which will get unleashed is about 1.16 lakh crores. And overall, I think one thing is clear that the previous GDP numbers are not going to be achieved, and which is why the GDP numbers have been sort of brought down. And on the inflation side, for FY25, RBI has projected inflation to be a bit higher at 4.8 odd percent. This was 4.5%. But our sense also is that given the fact that RBI has gone into a CRR cut, so the potential for further rate cuts has brightened, especially in the Feb policy. So from that perspective, I think this is a pretty good move from the RBI and very much required or very much expected by the market. So all in all, RBI policy is also clearly supporting into that direction, and banks were sort of facing challenges on the liquidity side. So CRR cut in interim, it will happen in two phases, two fortnightly. So from that perspective, I think it's pretty positive for banks as well. Next step would be again hoping for a rate cut in Feb.
Absolutely, sir. I think auto volume numbers are also out for November. Who is leading ahead?
So after festive season, there was a cool off expected. So numbers are on sort of expected lines. I think segments like two-wheeler and passenger vehicle continue to sort of witness steady growth, and whereas CV has posted a flattish performance. But on the CV side, our sense is that in the second half, since overall interest spend is expected to improve, so CV sales could possibly improve. On the two-wheeler side, we have seen steady growth, and I think on the passenger vehicle side, we have clearly seen M&M continues to sort of do well with about 15% kind of a growth. In Maruti's numbers were quite okay with about 10% kind of a growth. And I think tractor is something which we would expect a growth of nearly 9 to 10 odd percent in the second half. So from that perspective, the numbers have started to sort of look better for on the tractor side also, uh, because in the first half, overall tractor volumes were sort of flattish. So for M&M, tractor volumes improved by 4 odd percent, but we would expect these numbers to sort of improve further going forward. And I think clearly with the stock which is clearly doing better is M&M across parameters. So I think that is remains our topic.
Absolutely. We also had a lot of news coming from the defense sector with lots of orders and a lot of activity happening. So what are the readings there?
So I think after a long time, the Defense Acquisition Council accorded the acceptance of necessity to five projects worth about 1,700 odd crores. Now, up till now, this year they've approved or given approval for about 1.7 lakh crores, and in the last 2.5 about 8 lakh crores. Now, overall sense is that in the second half, overall capex is expected to to pick up, and defense is also an important component of it. So, from that perspective, I think this is the much needed news which was expected, and I think this is just a sort of a beginning. And our sense is that while this kind of acceptance of necessity will benefit, say, for example, players like, say, Mascot of GRSC Cochin Shipyard. But overall, the entire defense as a space sort of benefit, because this is one sector where we have seen decent amount of correction and also a bit of a time correction as well. So from that perspective, it does revive the overall spirit of the sector. So from that perspective, I think it's a very welcome news. What we are liking in defense is HAL with a target price of 4,800. I think Bharat Electronics can be a topic because electronics is something which is required across, be it a aircraft or be it even a frigate or any kind of military equipment. So from that perspective, that is one. And I think Midani is something which we are liking. We have been liking for quite some time. But second half is where we would expect things to sort of pick up. So Midani also with a target price of 430.
Right, right. What's the outlook on housing sector?
I think real estate, overall housing sales have been healthy, and they have hit a new 9-month high. Because overall sense is that over 2.3 lakh homes have been sort of sold in top seven cities. This is worth about closer to 4 lakh crore. I mean, last year, similar number is about 1.96. So overall volume growth has been about 17%, and value growth is about 9 odd percent. So, and I think so from that perspective, this segment continues to do well. We would want to believe that the second half is expected to be probably even more better, largely because of the fact that one, things can brighten up more if we get a rate cut from the RBI. And also the perspective that since the inventory levels have started to sort of come down, which means that the pricing can become even more better. Most of the stocks have sort of done well, so which is why we are very selective in this space. So Brigade looks very attractive to us with a target price of 1450. Or another would be Mahindra Lifeways, which is also looking at doing 5x kind of a sales in the next 5 years with a target price of 610.
Right. We also had the news this week of Aster joining hands with Quality Care. So how do we look at this deal?
I think healthcare is something which is there in the news almost all on a daily basis or on a weekly basis, and I think this sector continues to witness good amount of M&A. And what we have seen is that Aster DM and Blackstone owned entity Quality Care, I think they have agreed to merge and create the number 3 hospital chain in India. And merged entity would have combined revenues of 7,300 crores and a bit of closer to about 1,400 crores. So about the 19% kind of a margin and bed capacity of 10,000 plus. Now, overall sense is that at the combined basis, the margins will improve to 23 to 25%. And transaction also looks quite okay to us. So from that perspective, I think overall the lever where probably potential benefits can accrue is on the RPOB improvement, because the combined entities RPOB is say below 40,000. So this can be slightly more higher or lot more better than the current levels. So from that perspective, I think hospital is one segment where you see good amount of action on the listed side, on the unlisted side. And I think this is one of the best consumption plays, largely because of the fact that one, we are clearly seeing good amount of capex being happening. It's a good play on the insurance penetration. Medical tourism is something which will continue to sort of lift the sector. So all in all, it's a sort of a good proxy for consumption, and which is why I think this is one of this sector, at least one of the stocks is must to have in the portfolio.
Absolutely. And of course, when we talk about M&As, cement can't be far behind. We also had rumors of, again, Adani talking to Star Cement, but nobody knows what's going on. So, what is happening there?
Oh yes, I think cement prices are at a 1-year low. Cement sector had one of the worst quarters in this Q2. But yes, there is one thing which always keeps the sector in limelight, which is M&A. Now, yes, there are sort of media reports which are suggesting that Adani Group might be evaluating the acquisition of Star Cement, which is a northeast-based player with a capacity of about 7.7 million tons, and they're looking to sort of expand their capacity to about 11.7 million tons. And so both the top big players, Adani and Ultratech, have been very active in the M&A space. And I think overall our sense is that see, while the cement prices are soft, but in this second half, expectation is that there could be some improvement in the prices, though it is yet not sort of confirmed. But I think worst is already there in the prices, and which is why we would want to believe that any kind of an incremental positive has the tendency to improve the overall price performance of this entire category of stock. So from that perspective, since infra spend is expected to pick up, volume growth is expected to be a lot more better. And on top of that, when that happens, I think the pricing increased confidence can also come back. So I think overall, the cement is a very good risk reward sector or stocks to sort of hold on to or to buy at current levels, including the names which are there in the M&A, or in general, most of the cement stocks are looking quite attractive.
Awesome. And finally, coming to the most awaited section of the week, hidden gem, which will it be this week?
I think what I would want to recommend is Saregama. It's a play on the proxy music industry. Now, while a lot of content gets or is of no use over a period of time, I think music is something where the longevity is fairly large. I mean, people listen to a lot of old songs for a good period of time. And Saregama is one of the few companies which is having the largest repository of songs. Our sense is that the management has guided for 30% kind of a revenue growth in the next 3-4 years. And the licensing revenues are expected to grow again at double digits of 23%. So the thing is that the overall increase in the social media consumption is definitely going to drive the numbers for this company, because it helps them in terms of better monetization. So overall sense is that while next few quarters growth could be slower on the overall side, but profitability is something which is expected to be a lot more better. So we would expect that their EBITDA margins should improve to about 31.5%, and that should lead to about 23% CAGR growth in earnings. So I think this is one of the few companies or niche consumption plays where I think music is going to sort of drive, or digitization of music is going to drive the overall numbers. And I think it's a portfolio stock to be held. We haven't seen much of a price performance, and which is why I'm recommending with a target price of 610.
Great. Thank you. Thank you so much for that. That was a wrap. If you have any questions for Pankaj sir, please do put them now in the comments. Thank you again so much for watching. Thank you for sharing your expertise, sir.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.